Hey, I have a question for you. Hello there, first of all. Have you ever wondered why there are differences in rates? You always hear, this is the best rate, or this is the best rate, or no, this is the best rate. Hey, it's Amy Lewis from the KFBK Morning News, along with my buddy Brandon Hafley from Catalyst Mortgage, and we are talking about rates. And is there a best rate, or did you miss the best rate now that the rates are starting to go up because of the Federal Reserve? So, Brandon, is there a best rate to go with, or kind of is there a range?
Well, it's a great question that daily consumers say, when they call, what's your best rate?
Yeah.
And really, it's not what's about, the rate per se. I mean, your rate, of course, is important, but it's also what fees are associated or, what type of loan terms it is. And consumers really kind of get pulled away into this whole entire idea, the lowest rate is always the best, when 9 times out of 10, that actually might not be the case.
How do I know, though, if when I'm going in to ask for a good rate, how do I know if additional fees are kind of built into that?
Well, one way right now that anyone can see, when you get either something in the mail, you see an advertisement online, the best way for a consumer to look and see is if the rate and the APR, if there's a difference. The bigger the difference between the rate and the APR, the more closing costs. The closer they are together, the less closing costs and fees. And if they're exactly the same, that means it's completely zero cost. So that's just one way right off the bat to look at. But more importantly, when you're shopping for a home loan, you always want to shop around the same day and the same time of day and make sure you're getting quoted the exact same program.
It's so funny, though, when you say that, because I think to myself, so I got to check it on the same time at the same date. So literally, do I, set the alarm on my cell phone and say, I got to check the rates now?
One of the best ways I tell
Or should I not be that
I wouldn't be that
specific about it?
I wouldn't be that specific. But what I would say is, let's say it's the afternoon. Okay, you're going to say, okay, 2 o'clock, that's right, when the bond market's closing, so rates have really kind of leveled out.
Yeah.
And you already have, let's say you've received 2 or 3 offers from different companies, or you've seen 2 or 3 advertisements. You really want to go ahead and say, okay, I'm going to call them, and I'm going to ask the same questions to each of them. But you have to be careful because lenders are notorious for saying, yes, this is a no-cost loan. Well, then when you get your paperwork, oh, well, I'm at no lender fees. So, but there's still title and escrow. So you really have to make sure you're asking the question, truly, I want a zero cost, nothing added to my loan, except maybe a little bit of interest because you're skipping us payment, or if you're doing an impound account for taxes and insurance. But besides that, I want nothing added. What's my rate? What's my payment? And then you take that scenario and go to each lender and ask those questions.
And you really have to watch that, because I know that some companies will stick with the numbers and the conversation from the beginning to the end. Those numbers don't change. I know that from personal experience with you. Other companies, not so much. So how do you check that?
Well, up front, it's always get everything in writing.
Yeah.
Get your loan disclosures.
From the beginning.
From the very beginning,
Yeah.
just like we did with you. Up front, everything, and the variable factor shouldn't be it. And really look at when you're shopping, okay, someone's going to give you a quote in writing, and it'll say, let's say, a 3.75 with a 3.9 APR. Okay, well, there's fees. Make sure you're looking at those fees. Then you get another offer from somebody else. It might be a 3.75 rate and APR. Well, then there's no closing costs. So your loan amount, if the costs were being built in, should then be lower, which means then your payment's also going to be lower. Again, it goes into how long you're going to stay in the house, the type of loan.
Yeah.
Because right now, people are refinancing still every 5 years. People are either moving up, selling, and so on. So looking at that APR difference, and again, it's easy for a consumer to look at face value. What is somebody offering? And if they say a 3.75, 4.1 APR, there's probably going to be several $1,000s in fees that are tacked into that loan.
Is it always the lower the rate, the better possibility that you have closing costs, or you have costs that are built in that you don't know about?
I would say, yeah, there's a good chance. When you hear of the lowest rate, when we hear it all the time on TV, on the radio, and so on. People are saying a 2.75 15-year fixed. Well, okay, what are the fees associated with that? Or when they say a 2.5 15-year fixed, costs are associated. It's a tease rate to get you in, and that's okay if you're going to call and then really understand what it's about. But then check with 2 or 3 people, shop that loan, and make sure that you really are comparing rate and APR to rate and APR.
Do I negotiate a fee with a lender, or should I leave that up to somebody like you?
Well, we are the lender,
I
so
know,
I would say in the sense that each company has different margins, and so they have different levels of what they want to profit make.
So can I negotiate with you?
In theory, you can negotiate by shopping.
Yeah,
That's the best way to
okay,
say it, because
right. So
loan
you
officers.
can, but you've got to shop around.
Exactly.
You've got to
Well,
know what you're talking about.
Exactly, and companies that are more upfront, like, hey, this is how we make money. When we sell your loan, we're going to make, as we've talked about in previous,
Right.
discussions about service release premium, that are more transparent about the process and telling you the details. Well, then you know that, okay, hey, their company is probably going to be a good avenue to go. And I always go back to, especially in this rate environment, always work with a company that's going to float you down if rates drop during the refinance process. Free float downs, as we've talked about, is very important, because that way you're not being locked into something and then you can't refinance, or you can't get the lower rate if rates do drop, but you're still protected if they go up.
You know what I love about this? This really is all about education. I mean, seriously, this is all about education. If you want to do business with Catalyst Mortgage, that's great. But the main reason that you've been doing this is to make sure that we know what we're doing when we go in to get a refinance or we go in to buy a home. So go to catalystmortgage.com to learn more. That's catalystmortgage.com. Or listen on Monday mornings from 7 to 8 for the Catalyst Report on the KFBK Morning News. Thanks, buddy.